Hello, friends, and welcome once again to this session on Unacademy on Limited Liability Partnership Act 2008, Part 1. Why do I call it Part 1? I call it Part 1 because I will be discussing a few of the important concepts of the Limited Liability Partnership Act 2008 here, and the concluding and the next part will be done tomorrow, hopefully. Firstly, before I proceed, I would like to know from the participants if I am visible and audible. I hope all of you can hear me and see me properly. So I request all of you to give a thumbs up in case you can. Hello, Rutija. Hello, Kushi. How are you? So, Kushi, can you hear me and see me as well? If you can, please give me a thumbs up. All right. So, can we proceed? Can we start on with the class? Nice to know, Kushi, you're doing well. Firstly, I'd like to welcome you to Unacademy, India's largest online learning platform. And welcome to the Crack CA Exams with Us vertical, which deals with important topics and subjects and classes on the CA Foundation, Intermediate, and Final course. I will be handling the CA Foundation and the Intermediate course and delivering lectures and sessions on topics I think are important to you. A brief introduction about the speaker, the educator today, that's me. Hello, I'm Prathik Gupta. I'm a Bachelor of Commerce from Christ College, Bangalore University. I am an associate member of the Institute of Chartered Accountants of India. I am an associate member of the Institute of Cost Accountants of India and an associate member of the Institute of Company Secretaries of India. In addition to this, I'm also a law graduate from Karnataka State Law University. Currently, I have my own practice of chartered accountancy, and I'm also a visiting faculty for CA subjects and teach CA students both offline and online. Prior to starting my own practice, I was with SR Bartley Boy & Co., that is an Indian member firm of Ernst & Young Global in the Audit and Assurance Department. Post that, I worked with Ernst & Young in the Mergers and Acquisition Department. Then I had a stint in the industry where I worked with the Manipal Group and was the corporate controller of their Indian entity and the German entity. This is just a brief introduction about me. And so let's proceed with the classes. Hi, Divyanshi, how are you? Thanks, Kushi, I'm good and hope you're fine too. Okay, when you subscribe to Unacademy, what do you get? Firstly, you get daily live classes where you get to chat with your educator, engage in discussions and ask your doubt and answer polls all while the classes are going on. You get to choose the class that you want to attend in addition to chatting and actually talking to your educator and clearing all your doubts on real-time basis. Then you get live tests and quizzes which help you evaluate your performance and where do you stand so that you can identify your weak spots and work on them more accurately. Next, you get structured courses on Unacademy as all the courses are structured in line with your exam syllabus to help you best prepare for it. So the Unacademy platform helps you prepare step by step in your journey of examination and ensures that you cover all the important aspects and do not leave any leaf unturned. Next, you get unlimited access to all the content and resources of Unacademy, which you can access at any point of day according to your choice and convenience. So, I welcome you to Unacademy, India's largest online learning platform once again, and hope you make the most of it. For those who have not yet downloaded the Unacademy Learning app, I request you to go to your Play Store and download the Unacademy Learning app. It's a very simple and easy procedure where you need to enter your mobile number, you get an OTP. Using the OTP, you can get yourself registered on the Unacademy Learning app and open your door to the world of resources and courses that Unacademy has to offer to you. Unacademy offers various subscription packages. For the CA Foundation and Intermediate subscription, Unacademy provides you a subscription package for 1 month, 3 months, 6 months, 12 months, and 24 months, the rates of which are given on your screen. While using the subscription package, please do not forget to use the code Prathik, Prathik, which will get you an additional discount of 10%. Here it is mentioned as code. It's not code, it's Prathik, Prathik, which will give you an additional discount of 10% on a subscription price. I request you to take 20 seconds and just go through the subscription packages so that you know more about it. Hi Hansika Gurjar, how are you? Thanks for joining in. Okay, now let's talk about the topic of the day. Now, the topic of the day is Limited Liability Partnership Act 2008. Earlier in the day today, I took a session on. Hi. Earlier in the day today, I took a session on the Indian Partnership Act 1932, which basically dealt with normal and traditional partnerships, which had unlimited liability and which had ease of starting up and doing business. Now, the Limited Liability Partnership Act 2008 came into existence, like the year says, in 2008. Now, why do you think the Limited Liability Partnership Act was required when we already had the Indian Partnership Act 1932, which was in existence and doing very well? So, why was the Limited Liability Partnership Act 2008 introduced to us? Anyone? Any answers? You can type the answers if you want. We can discuss a little on this. Why was the Limited Liability Partnership Act 2008 introduced when we already had the Indian Partnership Act 1932? Anyone? Hi Shiv, welcome to the session. So, why do you think Limited Liability Partnership Act 2008 was introduced when we already had an act, that is the Indian Partnership Act 1932? Anyone? Any answers? I'm sorry, Khushi, I didn't get your answer. For more about LLP, what's your answer or what's your question? Okay, so let's start off with the brief introduction about the Limited Liability Partnership Act 2008. To be followed, we separate it as LLP. Why? Why do you want to follow it, or why do you want to separate it as an LLP? Why not just have a normal partnership under the Indian Partnership Act 1932? Why would you want to separate it as an LLP, Khushi? Yes, you can ask me questions, you can give me answers. Why? Yes, Khushi, I'm waiting for your answer. All right. So, the Ministry of Law and Justice on 9th January 2008 notified the Limited Liability Partnership Act 2008. The Parliament passed the Limited Liability Partnership Bill on 12th December 2008, and the President of India has assented the bill on 7th January 2009 and called it as the Limited Liability Partnership Act 2008. Hi Vivek, thanks for joining in. Okay, so as you know, any act that comes into existence, it has to be passed by both the houses of the parliament, and ultimately the President of India has to give this consent, post which it becomes a law. So until then, it is a bill. So the bill has to be passed in both the houses, the Rajya Sabha and Lok Sabha. Once it is passed in both the houses, then it goes to the President for his final approval. Once the President of India gives his final approval to the bill becomes a law. And that's how the Limited Liability Partnership Act 2008 came into existence. Yes, Kushi, because it has a different conditions than partnership and a company, and it's a hybrid of both. Very good. As Kushi has rightly said, the need for limited liability partnership came up because of one basic factor that is present in partnership firms under Indian Partnership Act 1932. That was unlimited liability. The liability of the partners was unlimited, which meant that in case the firm defaulted on any money which they owed to any creditor is someone who the company owes money to, then the creditor could file a case against the company, and if required, the court could order the personal assets of the partners to be sold or attached in order to pay the money to the creditor. This was one of the biggest drawbacks of partnership firms under the Indian Partnership Act 1932, which was addressed in the Limited Liability Partnership Act 2008. Good, Khushi. Okay, the LLP Act 2008 has 81 sections and 4 schedules. The first schedule deals with mutual rights and duties of partners as well as limited liability partnership and its partners where there is an absence of a formal agreement with respect to them. So like the screen says, The Limited Liability Act 2008 has 81 sections and 4 schedules. The first schedule speaks about the mutual rights and duties of the partners, as well limited liability partnership and its partners, where there is absence of formal agreement with respect to them. So, like I told you in the Indian Partnership Act 1932, the most important, the most important document that is there in a partnership firm is the partnership deed. So, similar to a partnership deed, there is also a partnership agreement that is present in case of a limited liability partnership. We shall discuss about that a little further. Okay. So, the first schedule talks about the interrelation of the partners among themselves and the partner and the LLP as a whole, which we will discuss further in slides. The second schedule deals with conversion of a firm into LLP. Please remember, now what is a firm? Can anyone answer what is a firm? What do we mean by firm? Is it a proprietorship concern? Is it a company? Is it a trust? Is it an association of persons? What is a firm? Hi Param, thanks for joining in. What is a firm? Anyone? Prisha says association of persons. Ritija says company name. No. That's the incorrect answer. Anyone else wants to try? Okay, a firm simply means a partnership firm. A partnership firm that was registered under Shiv says a business company. No, Shiv, it's not a business company. A business company, the term company means a private limited company or a public limited company. And the term company cannot be used interchangeably. It cannot be used so easily. So a firm simply means a partnership firm registered under the Indian Partnership Act 1932, where it had unlimited liability. So the second schedule deals with conversion of a firm into LLP. Yes, a normal partnership firm which was registered under the Indian Partnership Act 1932 can be converted into an LLP by following certain procedures and formalities, and it can change its nature. That we will discuss that in the future slides. The third schedule deals with conversion of a private limited company into an LLP. Okay, now can someone tell me what is the difference between a private limited company and an LLP? Please try. Anyone? The difference between a private limited company and an LLP. Okay, what is a private limited company? Anyone can answer that? What is a private limited company? Okay, a private limited company is any it's a form of business organization which the name of which ends with private limited or limited. A private limited company is the capital of the private limited company is broken up into shares, which is taken up by shareholders. The board of directors of a company govern and run the company on behalf of the shareholders. And a private limited company has a separate legal identity distinct from its shareholders and members. That is one of the topics I will be doing very soon, a course on Companies Act 2013. So I request all of you to stay tuned for that one coming soon, maybe tomorrow or day after tomorrow, a Companies Act 2013. All right. So Shiv says business entity in private ownership. No, Shiv, you need to simplify that. It's not so complicated. Hi Stuti, welcome to my session. All right. So the third schedule deals with conversion of a private limited company into an LLP following various procedures and formalities. The fourth schedule deals with conversion of an unlisted public company into LLP. What is a public company? Can anyone tell me what's a public company? Anyone? What is a public company? A public company is the opposite of a private company. A public company is a company in which the public is generally interested, and the name of the company is followed by XYZ Limited. It is not private limited. It is XYZ Limited. The first condition is the shares of a public limited company are freely transferable and there is no restriction on that. Whereas there is a restriction on the transfer of shares of a private limited company. So, and now what do you mean by unlisted public company? An unlisted public company simply means a public limited company that is not listed on the stock exchange. If it is listed on the stock exchange, it will be called a listed public company. Okay, so the fourth schedule deals with conversion of unlisted public company into LLP. Yes, Prisha, 51% share with the public. Mm-mm. No, in a public limited company, majority of the shareholding is with the public. I think you're getting confused with a government company in which 51% or more of the shareholding is with the central government or the state government. So, a public limited company is a company in which the public is generally interested. That means the entire share capital of the company is open for the public to subscribe. Yes, Prisha, no problem. It's okay, confusion happens. Khushi, minimum 7 members and a maximum no limit. Yes, private limited company has a minimum of 2 and a maximum of no limit, and whereas the public limited company has a minimum of 9. It's not 7, it's 9 for a public limited company and a maximum no limit. Hi Anushka, welcome to the session. All right, can we proceed? Okay. Now, limited liability partnership meaning and concept. Hi Anushka. An LLP is a form of legal business entity with limited liability. It is an alternative corporate business vehicle that not only gives the benefits of limited liability at low compliance cost, but allows its partners the flexibility of organizing the internal structure as a traditional partnership. Now, let's go a little bit more into this paragraph. Now we are just discussing about the meaning and concept of what a limited liability partnership is. In short, we can also call it an LLP, and henceforth I will be calling it an LLP. LLP simply means a limited liability partnership for your information. All right. So like the slide says, an LLP is a new form of legal business entity with limited liability. What do you mean by limited liability? Don't you notice that this term is being used again and again, a limited liability? Now, what was the biggest drawback of a traditional partnership firm under the Indian Partnership Act 1932? The biggest drawback was unlimited liability. That is, the liability of the partners was not limited, but it was unlimited. Their personal assets could be attached to pay off the creditors. To address this concern, the Limited Liability Partnership Act 2008 was introduced. Now, how did it take care of that problem? The Limited Liability Partnership Act simply said that whatever capital the partners agree to contribute in the partnership agreement, their liability will remain sealed only till the unpaid amount of the capital that they have committed to contribute. For example, if A and B come together to form an LLP, and A says I will contribute 1 lakh and B says I will contribute 1 lakh as capital, what is the total capital of the LLP? It becomes 2 lakhs. But initially, when the firm starts, they both put only 50,000 rupees, or let's say 25,000 rupees into the firm as capital. So how much is the capital that they both committed? 1 lakh and 1 lakh. But what was the capital that they actually paid into the company? 25,000, 25,000. So what is the balance that each of them has to pay? 75,000 and 75,000. So tomorrow, if they suddenly buy goods from anyone and they have to pay, and the LLP goes bankrupt or the LLP does not have the money to pay the creditors, in that case, their liability is limited to only 75,000 rupees each. They cannot be asked to pay anything more from their personal assets. Are you clear with this concept, or do you want me to explain it to you again? Because this is a very important concept of LLPs, limited liability. Like the name says, limited liability partnership, you need to be very clear about what limited liability means. If anyone has any questions, please ask me. Am I audible to everyone? And the video is clear? Can I see a thumbs up? Am I audible and visible? Okay, so I assume everyone has understood what limited liability means. Shiv, have you understood what limited liability means? Khushi, are you clear about what limited liability means? What about Ritija? All right, chalo. It is an then let's go to the next part. It is an alternative corporate business vehicle that not only gives the benefits of limited liability at low compliance cost, but allows its partners the flexibility of organizing their internal structure as a traditional partnership. So, as the first paragraph goes, an LLP gives you the comfort of having limited liability for its partners. That's a very good positive. In addition to being very flexible in term, like a traditional partnership under the Indian Partnership Act 1932. So what happens? What is the same thing? Like a traditional partnership, this LLP also requires a minimum of two partners and a maximum of a particular number of partners. So in that case, a partnership firm, please remember, is always very flexible to run and flexible to amend rather than a private limited company, because there are lesser formalities regarding with the government authorities, whereas a private limited company has a few more formalities and procedures with the government for any changes or any amendments. So in that case, LLP is as flexible as a traditional partnership firm, along with the added advantage of limited liability. Is this concept clear to everyone? Okay. Second, LLP is an alternative corporate business form that gives the benefits of limited liability of a company and the flexibility of a partnership. Now let's compare two entities or two forms of organizations. One is a private limited company and one is a traditional partnership under the Indian Partnership Act 1932. Whereas a private limited company, one of the biggest advantage of a private limited company is that it has got limited liability for its members. That means the shareholders do not have unlimited liability, but the liability is limited only to the amount of unpaid share capital standing in their names. Which simply means if a person holds 1,000 shares of rupees 10 each, so what is the total amount that he needs to pay the company? 1,000 into 10, 1 lakh. But while share application and share allotment money, he paid just 50 rupees. So what is the balance amount remaining? 50 rupees. 50 rupees into 1,000 shares will become 50,000 shares. So in case anything goes wrong with the company goes bankrupt, the company does not have money. I'm talking about a private limited company. It goes bankrupt, it has no money. In that case, the maximum amount that they can claim from the members is only the 50,000 outstanding from them and not anything more. So this was one of the biggest advantages and features of a private limited company, which has now been introduced into the LLP Act 2008, and limited liability partnership have been given this feature. In addition to this, they have been also given the flexibility of a partnership. Now, a partnership, when I say partnership, a partnership is a form of business where two or more people come together to carry on common business and share the profits or loss, where the business is carried on by one of them or by all of them on behalf of the firm. So in that case, that is a partnership firm. So the flexibility and the nature of a partnership firm, along with the feature of limited liability, gives it a very good view and a very good image. So an LLP is very good. Now, just a little bit more information. The LLP Act came into existence in 2008, but this concept is not new. Earlier to this, there was a concept called LLC, Limited Liability Corporations, which was present in the United States of America. And it was also the same about the features of partnership as well as the limited liability was combined together, and an entity called LLC, Limited Liability Corporations, was started in the United States of America. So you can say the Limited Liability Partnership Act 2008 is also a little bit influenced by the LLC of America, wherein partnership firms had the feature or had the options of getting both the features of a normal partnership firm as well as the positive quality of limited liability for its partners. So are we clear so far? Thanks for the people who've joined in now. Thank you so much. Okay. Since LLP contains elements of both a corporate structure as well as a partnership firm, structure. LLP is called a hybrid between a company and a partnership. Like Kushi, I think, rightly said, that because a certain portion of it is taken from the Private Limited or the Companies Act, and a certain portion is taken from the Indian Partnership Act 1932, the LLP Act 2088 can be said to be a hybrid of both the corporate structure as well as a partnership structure. So we've taken the best of both the worlds. We've taken a few features, a few qualities from the corporate world. We've taken a few features from the partnership world, combined together, and we have formed the Limited Liability Partnership Act 2008. Any questions so far on the slide? Please take about 20-30 seconds, read the slide, and ask me any question you have. I will be happy to answer. Any questions? If there are no questions, I would like to proceed. Okay, Ritija has a question here. What is the flexibility of partnership? See, the flexibility of partnership is based for the first and foremost important flexibility of a partnership is you can make changes. You can get in a new partner, you can remove a partner, you can change your business, you can change the profit sharing ratios and everything without much interference or compliance that needs to be done with the government or any other regulatory agencies. So the partners of the firm have a flexibility in conducting their own business. See, normally whatever you do, your GST returns, your income tax returns, your professional tax returns, all those things will continue to be filed. But the main flexibility comes in terms of the way in which you want to conduct your business, your internal management. So in terms of a partnership firm, the internal management is not governed by any regulations or rules or laws. So that is the kind of flexibility a partnership firm gives you in terms of not going to take permission from the government again and again, not reporting to the government for each thing. Let me give you an example. In a private limited company, whenever there is a director who comes into the company or who leaves the company, there has to be a form that needs to be filed and filed with the MCA. MCA means Ministry of Corporate Affairs, or the ROC, Registrar of Companies of the particular state in which the company is incorporated. Every time a director comes in or a director leaves, every time a new shareholder comes or leaves, you need to file it. Every year you need to do annual filings with your MCA and ROC. So these are things that can get a little annoying at times, and the compliance cost goes up. So in terms of that, there is always a flexibility in partnership. So Ritija, I hope I answered your question. If I did, let me see a thumbs up. Okay, Ritija, thank you. Now coming to Mohammad Rafi. Hi, Mohammad Rafi. Please explain second point. LLP is an alternative corporate business form that gives you the benefits of limited liability of a company and the flexibility of a partnership. Like I told you earlier, one of the main features of a private limited company or company is that the liability of the members is limited. There is no unlimited liability for the members. So in such a case, what happens when the company goes bankrupt? If and when the company goes bankrupt and has no money, the maximum amount that the company can claim from its members is the unpaid amount on the share capital held by them. In case they hold 1,000 shares of rupees 10 each. So what should they be paying the company? 1,000 into 10, 1 lakh. But let's say they have paid only 20,000. So what is the remaining amount that they still need to pay the company? 80,000. So at the max, the company can say, okay, whatever 80,000 rupees balance you have, please pay it to us and be done with it. They cannot ask you for a single rupee over 80,000 rupees. That is the biggest feature of companies, that is limited liabilities. And next we come and talk about the flexibility of a partnership. Like I told you earlier, in terms of its internal management and governance, there is a lot of flexibility in partnership firms as they do not need to report each and everything to the MCA or ROC. And these things can increase your compliance cost and your hurdles. So that's the reason why an LLP is taken the best of both the worlds. It has taken something out from companies, it has taken out something from partnerships, combined both, and given you limited liability with the flexibility of partnership. So, Mohammad Rafi, I hope I have answered your question. Thank you, Ritija, for that feedback. All right, can we proceed? Okay, now let's come to the important slide, which is the characteristic and salient features of LLP. We see about 10 or 12 points here. Don't worry, we will be going with each and every point in detail and explaining things to you. All right, now first and foremost, what is the essential feature of an LLP? Is limited liability of partners. Like I told you earlier, limited liability means that their liability is limited only to the extent of capital that they have committed to contribute to the firm at the time of registration of the firm. Their liability is not a single rupee more than that. All right, so if anyone needs any explanation with limited liability, please ask me again, I will explain it. Or if it's clear, we'll move to the next one. Okay, now second point, flexible form of organization. Like I explained to you earlier, it has picked up a feature of limited liability from the corporates and the flexible feature from the partnership firms, combined both, and that's where you got LLP. Flexibility in terms of running its business, flexibility in terms of lower compliance costs, flexibility in terms of lower reporting that needs to be done to the government, and the partners of the firm can just go on with their business and focus with the business and take care of all the compliances at the end of the year as and when required. Administration according to LLP agreement. Okay, this is an important point. Now, under the Indian Partnership Act 1932, there was something called as a partnership deed, which was the mother of all the documents for a partnership firm registered under Indian Partnership Act 1932. All the internal governance, the relationship between the partners among themselves, the partners and the firm, and the partners and the outsiders, the functioning of the partnership firm was all contained in the partnership deed. So the partnership deed was the main document in terms of a partnership firm under the Indian Partnership Act 1932. Similarly, in terms of LLP, we have something called as a partnership agreement or an LLP agreement. The LLP agreement contains all the details that are required and are important with respect to the partnership or the LLP firm. Now, what are the details that could be entered in the LLP agreement? The details that are entered in the LLP agreement are firstly the name of the firm, LLP, the registered address, the address of any additional place of business that they have, the names and address and details of each and every partner, including their PAN numbers and the Aadhaar numbers if required, the details of all the businesses that they intend to carry, the LLP. So then the various duties and responsibilities and liabilities of the various partners, then the way the bank account will be functioning, the way a new partner will be admitted, the way a partner will be retired, what happens to the company when a partner dies. All those internal procedures are mentioned in the LLP agreement. Okay. Hi Suraj, welcome to the session. All right. So any questions so far, please feel free to ask. Any questions? Okay. LLP required to register with ROC. Now, what is ROC? ROC stands for Registrar of Companies. A Registrar of Companies is an organization or an entity which comes under the Ministry of Corporate Affairs that is entrusted with the work of collecting all the information and forms relating to private limited companies. Now, since an LLP took some qualities from a private limited company in terms of limited liability and this thing, it also limited liability partnerships were also taken under the ambit of MCA and ROC. So when you intend to start an LLP, you need to prepare your LLP agreement and a few other forms, and you need to submit it to your respective ROC, that is the ROC of the state in which the registered office of the LLP is proposed to be situated. For example, if you plan to start an LLP in Bangalore, you will file the LLP agreement with the ROC Karnataka or ROC Bangalore. So that is the city in which you intend to start your LLP. Okay, so I'm sure people are clear about what is an ROC. ROC stands for Registrar of Companies. Every major city has one. All right. LLP agreement is the main incorporation document, like I told you earlier. In terms of a traditional partnership firm registered under the Indian Partnership Act 1932, the partnership deed was the utmost important document. Hi Prachi, welcome to the session. Whereas in case of an LLP, the LLP agreement is a document of utmost important as it contains everything about the internal and external management of the limited liability partnership, and the partners are bound by the LLP agreement because they sign it, and they also sign a verification declaration saying that they have read all the matters mentioned in the agreement, and whatever matter is given there is true, and if anything is false they will be liable. So they also include their signature, and then this form is submitted to the registrar of companies under the MCA. So it becomes the Bible for the particular limited liability partnership. Then, the economic rights of partners are freely transferable. This is one point which is in contrast to the Indian Partnership Act 1932. In terms of a traditional partnership firm under the Indian Partnership Act 1932, if there are two partners with 50% share and 50% share, the partner cannot sell off or assign his 50% share in the firm without the consent of the other partner. This was not allowed to be done in a traditional partnership firm registered under the Indian Partnership Act 1932. But for an LLP, which is registered under the LLP Act 2008, it is freely transferable. A person can transfer his share, 50%, 25%, 30%, or his interest in the LLP business to anyone else without anyone's permission. Or if anything is mentioned in the LLP agreement, he is bound by those terms and conditions. And if nothing is mentioned in the LLP agreement, he is free to do what he wants. Next, the perpetual succession. Can anyone tell me what is perpetual succession? It's an important term. We will also discuss this term when we take up Companies Act 2013. So what do you mean by perpetual succession? Anyone? Give it a try. Life of organization. Can you explain that, Shiv? Can you explain that a little more? Okay. So can I means it is not going to end? Yes, what you're saying is right. Now let me explain to you how it is not going to end. Now what Shiv has explained is right. A perpetual succession simply means it's not going to end. Now let me explain to you with the help of a few examples as to how the life of an LLP is normally not going to end in the near future. Now let's say two partners, two people come together to form an LLP. So there is partner 1, there is partner 2. So partner 1 has his own PAN card, partner 2 has his own PAN card. When they both come together and start an LLP, AB and company, then AB and company becomes a separate legal distinct identity in the eyes of law and for income tax and Limited Liability Act 2008 purposes. So now there are three assessees. One is your partner 1, one is partner 2, and then third one you have AB and Co, which is the limited liability partnership of partner 1 and partner 2. Now come to perpetual succession. Perpetual succession simply means if partner 1 leaves the limited liability partnership or dies, that does not mean that the partnership firm will come to an end. Then a new partner can be taken in his place. But please remember, in an LLP, the number of partners is 2. The number of partners cannot go less than 2. So once a partner leaves or a new partner comes in, the nature of the LLP, yes, within 6 months, the second partner needs to be taken in, or as soon as possible. Hi Rahul, welcome to the session. So by perpetual succession, it simply means partners may come and go. New partners may come in, old ones might retire, partners might die, partners might retire from the firm, they might go out. But that does not mean that the limited liability partnership will come to an end. It has got perpetual succession until and unless it is formally dissolved and shut down by the partners. So that is the meaning of perpetual succession. This concept will hold good also in terms of a private limited company. A private limited company and a public limited company has perpetual succession, which simply means the shareholders and directors may come and go, but a company will not die, a company will not end until it is formally put to an end. That's what perpetual succession means. Succession means one person goes, another comes. One person goes, another comes. One person goes, another comes. Is everyone clear with this concept? Anyone wants me to explain it again? Anyone? I can explain it to you again. Okay, let's move to the next point. The next point is separate legal entity. Like I've already. Yes, Shiv, which is the fifth point? Can you tell me? Which point do you want an explanation, Shiv? LLP agreement is the main incorporation document. Is that the point you're referring to? Okay. Now, like I said, in an Indian, under traditional partnership firm, under Indian Partnership Act 1932, the partnership deed is the most important document. Similarly, under an LLP Act 2008, the LLP agreement, that is the Limited Liability Partnership Agreement, is the utmost important document, and it contains all the important clauses, rules, and regulations pertaining to that particular limited liability partnership firm. So, LLP agreement is considered the main incorporation document. Why? Because it contains details about everything. It contains the details of the name of the LLP, the registered address, the place of any additional place of business, the names and addresses of all the partners, the PAN numbers of all the partners, the who's going to operate the bank account, the liabilities, roles, and responsibilities of all the partners, and other things as to in terms of the mode of admission, the mode of retirement, the mode of settlement of accounts, of everything of the partners is all contained in the LLP document. So LLP document becomes the most important document. And further, once the LLP is registered, your LLP document is the one that needs to be given for your various registrations to the various regulatory and tax authorities. For GST registration, you need to give the LLP agreement. For professional tax, for income tax, you need to give your LLP agreement. So that becomes the very important document, and all the actions in the LLP are done based on the provisions of the LLP agreement. So, Shiv, I hope I answered your question. Okay, let's move to the next point. Separate legal entity, like I explained to you again, partner 1, partner 2 come in together and form a LLP called AB and Co. So now we have three different entities. We have partner 1, we have partner 2, and they both come together. Now the third entity that is formed is AB and Co. For income tax purposes, there are three entities. Partner 1 has a PAN card, partner 2 has a PAN card. The limited liability partnership will also get a separate PAN card and will file its own individual returns. So in the eyes of law, in the eyes of law, it is a separate legal entity that can enter into contracts, that can file cases, that can hold assets, and can hold the partners liable for any wrongful acts. Any question on that point? Okay, next one. Every partner is an agent of the LLP but not liable for the wrongful acts of other partners. Now, this point is again contrary to what was contained in the Indian Partnership Act 1932, whereas one partner was held liable for the wrong act of the other partners done when it was done on behalf of the firm. That point does not apply to a LLP, whereas one partner is an agent of the LLP but not liable for the wrongful acts of the other partners. If the other partners have done any other wrongful acts in their individual capacity, then this particular partner will not be held responsible for the same. Again, the limited liability concept saves him. Even if he is held liable for it, what is his maximum liability? The amount of unpaid capital standing in his name. That's about it. So now you understand how limited liability concept is very important for partners in limited liability partnership firms. In the absence of any provision for distribution of profits or losses, partners are entitled to share profits and losses equally. Yes, normally your partnership agreement, your LLP agreement contains the names of all the partners, the capital contributed by all the partners, and in addition to this, it also contains the profit sharing ratios of all the partners. There, for example, if there are four partners, whether all four partners share 25, 25, 25, 25, or it could be 10, 20, 30, and 40. So whatever is the profit sharing ratio, it is contained in the incorporation document. And in case it is not mentioned, for some reason they do not mention that what is the profit sharing ratio, then it is assumed that the profit sharing ratio is equal among all the partners. If there are three partners, then the profit sharing ratio becomes 33.33% each. If there are two partners, it becomes 50% each by default. Another point to say is if there is any point that is not contained in the LLP agreement, that point will be governed by the LLP Act 2008, whatever the provisions of the LLP Act 2008 talk about. In case that point is still not covered by the LLP Act 2008, it will be governed by the Contracts, Indian Contract Act 1872, wherein I have done two sessions on it already, yesterday and day before yesterday, so you might just go back and attend those sessions. Any questions so far? Any questions? Please feel free to ask. Any questions? Okay, come to the last point. LLPs are not allowed to operate as non-for-profit organization. Now, what do you mean by not-for-profit organizations? We come across a lot of charitable institutes, a lot of charitable organizations that do not work for profit, that work for charity and for well-being of mankind in general. So an LLP is specifically not allowed to operate as a not-for-profit organization, and it is deemed that an LLP has to be a profit-making organization. Now, what is the objective of calling yourself a not-for-profit organization? What is the benefit that an entity gets by calling itself a not-for-profit organization? Can anyone tell me? Anyone? Okay, a not-for-profit. Yes. Yes, Shiv. Okay, now the question here is what is the benefit that any entity gains by calling itself a not-for-profit organization? What do you mean by not-for-profit organization, and why would an entity want to call itself a not-for-profit organization? Why do you think it does so? Any answers? Anyone? Ritija, Shiv, Khushi, Prisha. Works for welfare and runs on donation and grants. Okay, so what is the meaning of not-for-profit organization? Why is it so important? Okay, if no one's giving me the answer, I'll give you the answer. Simple. If it's a not-for-profit organization, please remember, if you're not making any profits, you're not paying any income tax. So there are a lot of entities that are registered as trusts and charitable institutes, which call themselves not-for-profit organizations, which simply means whatever money they get in terms of donations and grants and incomes from sources is used for a particular purpose. What is that particular purpose? The particular purpose could be charity, it could be education, it could mean upliftment of the weaker sections of the society, education of girls, and whatever. So it means whatever money they receive, it is used for a particular purpose, and whatever excess money that is left after meeting of all the expenses is not distributed among the shareholders or the owners or the top management as profits, but it is kept inside to be used in future. So Basically, they make no profits. Whatever expenses they incur, they pay for that and they reimburse it, and the excess money they keep it with themselves. So when there is no profits, obviously there will be no income tax. But it is not so simple as this. To avoid, or not to avoid, to be a non-profit organization or something, you need to get registrations under Section 12A, 12AA under the Income Tax Act 1961 by submitting documents and forms. And once that is done, only then can you grant yourself a status of being exempt from income tax. Until then, it's not exempt from income tax. Is it clear? Anyone has any questions, please ask me. Anyone? Yes, Shiv, government gives reduction in taxes. Not reduction exactly. The government waives off the taxes in case you are really a not-for-profit organization. Okay, who could give me an example of a famous not-for-profit organization that's supposed to be a not-for-profit organization? We hear it day in and day out. Who can give me an example? Yes, Cry, Orphanage, yes, good. Anything else? UNICEF? Hi, Bharti. Okay, now have all of us heard of Being Human? That is an initiative started by Salman Khan. So that's an entity that actually contributes to charity and to poor people and to the needy. So that also is supposed to be a non-for-profit organization, Being Human. All right. So any questions so far before we proceed to the next slide? Now, what do you think are the advantages of an LLP? Provides flexibility without imposing detailed legal and procedural requirements. Like I told you, even to start an LLP, all you require is an LLP agreement. You need two partners. You need certain details. You fill in all the details and submit the form with the ROC. ROC finds everything in place. He will start your LLP. In addition to your income tax returns every year, you need to file maybe a couple of forms to the ROC every year. So the compliance is relatively lower than a private limited company, but it is definitely higher than a traditional partnership firm under the Partnership Act 1932. And also it gives you flexibility in terms of running your firm and not being bound by too many rules and regulations. I welcome Abhishek and Neha to the session. Thank you so much for joining in. An LLP is organized and operates on the basis of an agreement. Like I told you earlier, the whole crux or the main document that an LLP has is the LLP agreement, and all the terms and conditions, rules and regulations, procedures are all contained in the LLP agreement. So whenever there is any doubt, first an LLP agreement is referred to see if it contains any provision to clear that doubt. In case it doesn't, then we go to the LLP Act 2008. In case the LLP Act 2008 does not have it, then we look at the Indian Contracts Act 1872. Third point, it is easy to form. Like I told you earlier, it's easy. See, I will tell you, it's easier to form than a private limited company, but a little bit more difficult to form than a traditional partnership under the Indian Partnership Act 1932, as this involves a few more forms and procedures, but not as much as a private limited company. So all you need to do is get two partners, get their DIN numbers, or DPIN, that is designated partner identification numbers. You need to get them digital signatures. You need to have your PAN card in place. You need to have your Aadhaar card in place. You need to have basically your address proofs in place. If you have all these documents, you prepare your LLP agreement, fill up all the details. Both the partners sign the verification and sign the agreement and submit it to the ROC for his approval. If everything is in order, the ROC will finally give his approval and an LLP will come into existence. We will talk about the incorporation process of an LLP in the following slides. All partners enjoy limited liability, like I explained to you again before. Limited liability simply means their liability is limited to the amount of capital that they have agreed to contribute to the LLP in the LLP agreement. Their liability cannot be held to be more than that. That is a big advantage of an LLP. Flexible capital structure. The partners are free to choose their own capital structure. Whatever is the capital structure, they are free to choose. and modify it accordingly. Easy to dissolve. Again, LLP is very easy to dissolve compared to a private limited company. You can either apply to the court or to the tribunal to dissolve, or you can apply to the ROC, that is Registrar of Companies, for dissolution of your LLP. So all these processes are relatively easier than a private limited company. Any questions in this? Please ask me before we go to the next slide. Okay, extent and limitations of LLP and partners. Partner is an agent of an LLP and not of the partners. Please remember, a limited liability partnership is a separate legal distinct identity. So each partner is an agent of the LLP firm and not of the other partners. So the action of a partner binds the firm and does not bind the other partners. LLP is not bound by the act of partners, has no authority to act for the LLP, like I told you just now. LLP is liable if a partner is liable to any person as a result of wrongful act or omission on his part in the course of business of LLP or with authority. Now, in case the normal business of the LLP is going on and any partner in the course of normal business does any wrongful act with an outsider, then the LLP is liable for the acts of the partner, simply because the partner is an agent of the LLP and not of the other partners. So the LLP will have to make good the loss to the outsider, but it in turn can claim it from the partner who committed the default. Obligations of LLP shall be solely obligation of LLP and not of the partners. Yes, this is again one of the main things which arises from the limited liability. Whatever obligations are there of the limited liability firm have to be met by the limited liability firm, and they cannot be claimed from the partners except for the amount of capital unpaid as mentioned in the LLP agreement. So over and above that, the LLP cannot claim anything more from its partners. A partner is not personally liable directly or indirectly for any obligation of the limited liability partnership where arising in contract or otherwise. This again stems out from the concept and term of limited liability. This simply means during the course of business, if the limited liability partnership incurs any liabilities, the personal assets or the personal belongings of the partner cannot be touched to meet the official obligations or liabilities of the limited liability partnership firm. Any questions so far? Anything? We just have another 5 minutes of the session. Any questions? Okay, unlimited liability of LLP and partners in case of fraud. Now, in case there is a fraud committed by any of the partners with an outsider or with the LLP, in that case, the LLP firm is also unlimited, is also liable to unlimited. I will let you know, Shiv, about tomorrow's class. Is also liable to an unlimited extent in case of fraud. Let's read this. In the event of an act carried on by an LLP or any of its partners with the intent to defraud creditors of the LLP or any other person or a fraudulent purpose, liability of that person shall be unlimited for all. So if any of the partners carry on any activity with the intention of carrying a fraud, then their liability is unlimited. Then they cannot claim an unlimited liability. Where any person knowingly carried on a business in a manner for said be punishable with imprisonment for a term which may extend to 2 years and a fine of minimum of rupees 50,000 which may extend to 5 lakhs. So again, if a person carries on any fraud with any outsider or anything of the LLP, then he shall be personally liable. In addition to that, if he is prosecuted, he could be punishable with an imprisonment of term which may extend to 2 years and a minimum fine of 50,000 which could extend to 5 lakhs. Hi Sandeep, welcome to the session. Hi Suman, hi Vasu. LLP and such partner shall be liable for compensation to any person who has suffered loss or damage by reason of such conduct. Again, if there is any fraud that is conducted and any person relying on such fraud has incurred any loss, in that case, the partners and the LLP will be liable to him, and the partners will be liable to an unlimited extent. I hope all this is clear. Any questions so far? Yes, Shiv, what's the question? When any person carries on, second point, when any person knowingly carries on business in a manner foresaid, that means if any of the partners of an LLP carry on any fraudulent business or carry on any fraudulent transaction with the person who works or transacts with the LLP with an intention of defrauding him, in that case, firstly, he will be liable to an unlimited extent. That means his personal assets can be attached. And secondly, if he is found guilty, he can be punishable with a term which may extend to 2 years and a fine of rupees 50,000, which may extend to rupees 5 lakhs. So that is what your second point is. I hope I answered your question, Shiv. Yes, any more questions? Now, as time's up, I think the incorporation of the LLP bit, I will continue it tomorrow in my part 2. So I request everyone to stay tuned for the part 2 of the Limited Liability Partnership Act 2008, which will be the concluding session as well. So I hope all of you enjoyed my session and found it useful too. It was a pleasure addressing all of you. Thank you so much. Yes, Kalpana, I will let you know about tomorrow's time. And Kalpana, yes, I know your answer is pending. You asked me what a Warfinger document meant. I remember that, and I will answer that tomorrow. All right. So thank you so much. It's a pleasure addressing all of you, and I will see you again soon. Thank you, and Prathik Gupta signing off.